to another video. In the previous videos, we had learned about income statement and balance sheet. In this video, we are going to learn about cash flow statement. So what exactly is cash flow statement? Cash flow statement tells you about how the particular company spent their cash. We will look into a cash flow statement and we will try to analyze what it looks like. So this is the cash flow statement of ITC. I'll tell you about the few important things that you need to look into a cash flow statement. So the first thing that is really important is cash from operating activities. Cash from operating activities tells you about the cash that the company generated after doing what it is known for. For example, if you take ITC in this case, how much cash did ITC generate after selling its products like the classic cigarettes or notebooks or maybe biscuits or any other thing that ITC is involved in, right? So one thing that you really need to look is that the cash from operating activities for the past few years should be increasing. It is always a good sign that the company is generating more and more cash from its operating activities. If you see, since 2012, ITC has been improving and growing its cash from operating activities for the past many years, right? The next thing that we look into is once they have generated this cash, what are they exactly doing with that cash? So if we see here, the next thing comes as cash from investing activities. So whatever money was generated, whatever cash was generated, they used 6,000 approximately. So let's just say they generated 14.6 thousand crores. Out of that, they used 6,000 crores to invest that amount, invest into expansion of ITC or whatever that would create more cash the next year. That's what cash from investing activities are. Next is cash from financing activities. This basically means how much cash did the company spend into paying debts or maybe paying the shareholders dividends. All these come under cash from financing activities. Once you sum up these, you get net change in cash. Next thing is changes in working capital. Changes in working capital means how much change was there in the working capital since the previous year compared to this year. That is what is changes in working capital. Capital expenditure is what all places the company used its cash to continue its capex operations, as in they bought machineries, or there was a fee for maintenance of the machineries, or maybe paying rent or buying properties or anything that is required for the company to maintain its capital expenditures. Finally, after all the cash has been spent into these things, there is something called free cash flow. Free cash flow tells you how much cash is left with the company. Alright, and it is always good that the free cash flow is increasing. This tells that the company has a very strong cash flow statement. So if we see here, ITC has been increasing its free cash flow. So I'll tell you what is the advantage of having a good free cash flow. Suppose you have 10,000 rupees and you have invested the 10,000 rupees into a stock. Now there is a bear market going on, and now you see stocks that are trading under its actual value, and you know that it is a very good chance to enter those stocks. But if you do not have free cash with you, you cannot enter that stock, right? So similarly, when a company has free cash flow, it's called a cash rich company, and you should always look for a cash rich company so that if new opportunities come, you know that your company can get into those opportunities because you have a lot of free cash with you. So two things that are really very important is you see that cash from operating activities is increasing continuously and free cash flow is also increasing continuously. So this would be it for this video. I'll see you in the next video. Till then, take care. Cheers. Bye.